In times of uncertainty, it's natural to seek stability. Our desire for certainty and security intensifies, especially when we feel vulnerable. Yet, true stability has always been an elusive concept. Our sector is one defined by constant shifting of economic forces, geopolitical tensions, and rapidly changing technologies that we like to think are advancing and improving our stature in the world. Now, we find ourselves navigating an era of heightened complexity and uncertainty, more intricate than ever before. Perhaps it's time to address these realities with greater transparency and bluntness rather than leaning on overly optimistic narratives. My experience in the Middle East and in developing countries have taught me several valuable lessons about the effectiveness of direct, pragmatic approaches, even when they contrast with my personal ethos of nonviolence and diplomacy. Surprisingly, in many parts of the world, surprisingly to many people here who haven't experienced some of these other cultures firsthand, where people are more attuned to these approaches that resonate and yield results. For much of the global population, life is far removed from the idealized simplicity of Mayberry, where Andy Griffith kept the order with fairness and ease. Instead, they confront challenges with a rawness and resilience, and often a secrecy that we're seeing demands honesty and practicality, a perspective that those of us in more sheltered environments may need to adopt as we face increasingly uncertain times. I'm Mark Roach with FutureWise Energy. Over my decades in this industry, I've seen firsthand how global events ripple through oil and gas communities, through markets. In my time in the Middle East during the 1990s, working with state-run oil companies and their Western partners from over here, gave me unique insights as to how these dynamics play out. Back then, I led workshops introducing modern management practices and some technology for running oil fields and making critical decisions and supporting the processes that hadn't been implemented in those regions before. The tensions and frustrations rooted in conflicting systems and approaches remain relevant to the challenges that we now see and face in this global scale today. The geopolitical backdrop is deeply strained. War and conflict in strategically critical regions disrupt energy markets, lives. Brent crude prices surged 25% recently, exceeding $81 a barrel during the heightened tensions in the Middle East. But these price spikes, while dramatic, are less enduring and less severe than in earlier crises, reaching back 40 or 50 years. Financial markets have evolved, and price adjustments are now happening faster. West Texas Intermediate crude currently sits at $72.53 a barrel, reflecting this rapid recalibration. On the gas side, volatility is even more pronounced. Liquefied natural gas markets, LNG, responded almost immediately to geopolitical and logistical shifts, creating even sharper price swings than we see in oil. This extreme volatility highlights systemic vulnerabilities in global energy networks. Production data provides a clear view of the market's current posture. The total U.S. rig count has fallen to 554, down from 5 88 a year ago, oil rigs have now dropped by 47 in that time frame, with only a modest gain of 13 gas rigs. Operators remain cautious, reluctant to expand without stable, predictable returns. On the consumer side, that tells another important story. Gasoline prices have inched up to $3.22 a gallon on average, while diesel now averages $3.70. These numbers, although climbing recently, remain below last year's levels. This points to a recalibration within the interplay of global supply and demand as nations and operators adapt to the current economic and geopolitical environment. One stabilizing force stands out amidst the volatility. The oil price floor of $60 to $65 per barrel stated by the administration appears to be holding firm. Unlike previous periods of intense volatility, the pricing benchmark provides a degree of predictability, helping prevent drastic economic swings that could further destabilize markets. It is a cautious reminder that while geopolitical tensions are severe, the floor helps mitigate extreme outcomes, offering some sense of balance. Challenges remain acute. Conflict near strategic regions like the Strait of Hormuz elevate shipping risk and add some premiums to crude deliveries. Gulf states continue to respond with urgency, increasing exports and optimizing supply routes to dampen disruptions. These efforts underscore the fragility and interdependence of the global energy system. Beyond direct geopolitical impacts and regulatory pressure, shifting trade policies and environmental targets further complicate the picture. The industry faces mounting pressure to allocate capital toward systems that prioritize efficiency and sustainability. This isn't about success or opportunity. It's about addressing a reality that requires broad structural adjustment to ensure operations align with evolving demands. The push for consolidation is quietly gaining momentum across the U.S., driven by renewed emphasis on the vital role of oil and gas in supporting the international policies of our administration. This focus on energy independence has a significance not seen in the past, highlighting its growing importance on the global stage. Markets have become less reactive to media headlines driven by a consistent narrative from the administration that exudes confidence, whether justified or not, that the U.S. upstream producers have effectively ended our dependence on oil imports. Within the industry, however, there does remain a strong demand for thoughtful, strategic decision-making and the flexibility to adapt to evolving conditions in real time. For those closely observing and navigating these shifts, recent events highlight the inherent volatility of this sector. It's a challenging reality, but one we must confront head on. I'm Mark Roach, and this is FutureWise Energy.